And this is what we value gold at. So our balance sheet. If you think about what's a dollar worth, it's worth the assets that they hold. What's the only real asset that the federal government has in a monetary sense? It's gold. How much gold do you have? What do you value it at? So U.S. being the reserve currency issuer could say overnight, we think that gold is worth $20,000 an ounce. And guess what we have? I don't know how much they have, and so all of a sudden I was like, oh, shit, they've just devalued the dollar in gold terms, but they own a bunch of gold. So now the dollar, instead of being a U.S. Treasury-backed currency, and the U.S. Treasuries are trash because of all this spending, it's now a gold-backed currency. And guess what? They've got a lot of gold, and it's worth $20,000 an ounce.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Arthur dissects the potential collapse of the fiat financial system, cryptocurrency as an alternative, and the role of large asset managers. This conversation covers everything from the nuances of Bitcoin and Ethereum to the global trend of de-dollarization.
It wouldn't be a peg per se. It's what do you think a dollar is worth, right? If you believe in this de-dollarization thing and that country's saying, I don't want to hold the dollar because it's inflating away, it has no value, it has no assets backing that. I don't believe in the U.S. Treasuries. Well, then the federal government and the Fed could say, oh, actually, guess what? We've got all this gold. It used to be worth this. Now it's worth that. This new price that we believe gold is worth is massively above the current clearing price of gold. For certain individuals, we'd be willing to exchange gold for dollars. Not everyone, obviously. Only certain individuals, certain probably sovereign nations. And all of a sudden, the dollar becomes a strong currency.
Where do you think ETH goes from where it's at now?
Oh, maybe 30, 40,000.
Whoa! That's massive.
Trickle down, you have the ETH ETF, possibly the Ethereum is the decentralized computer, and the decentralized computer has a commodity, the ETH, the currency, that pays an intrinsic 4% yield, which is a staking yield. It's the only, crypto asset of that size that has this intrinsic yield, and that's going to draw it's the internet bond. It's the bond of the internet computer and pays you a yield to own it. And so I think that's going to be a very powerful narrative as people start to think a bit more about what ETH actually is. And they're going to allocate and say, oh, well, not only do I get sort of this deflationary network value increase in the ETH, the currency, I'm also getting paid 4% yield in ETH. Where else do I get that sort of return? That's great. I want to allocate to this. And there's all sorts of different interest rate strategies you can do around that. But I think that's going to be a big narrative for people who are going to get into ETH and understand, oh, great, I get to participate in, let's create a new digital internet on DeFi, and I get 4% yield.
ACO dealing, an acronym that means hold on for dear life, is built on the long-term optimism that has been the driving force behind technological advancements that have forced us into modernity. It's time to take that embrace of crypto culture a step further. We should make HO dealing the default American position on all technology. Americans tend to be optimistic on general terms, but that quickly gives way to pessimism in the specific. Just a decade ago, 78% said they would not eat lab-grown meat. Today, the number has nearly flipped, with 60% now indicating a willingness to try it. Similarly, in the early 2000s, Amazon and Jeff Bezos faced intense scrutiny and skepticism. While Amazon stock was trading around $50, the USA Today said, Amazon.com will never again approach its early 2000 share price of nearly $600, and there's no guarantee the company will make a profit anytime soon. Others were far less kind. Malcolm Burko claimed that unless shareholders get rid of Bezos and the buffoons in the boardroom, those clowns may add a new chapter to the books sold by AmZen called Chapter 11. This company is a joke, and so is its leadership. Yet Bezos held firm, confidently navigating through market fluctuations and critics who predicted the company's demise. Today, Amazon stands as a trillion-dollar empire, a testament to Bezos' unwavering belief in its potential. Apple, too, encountered skepticism. Microsoft's Steve Ballmer and one of Apple's own founders, Steve Wozniak, questioned the impact of the iPhone and Macintosh. However, Steve Jobs remained unyielding in his vision, transforming seemingly flawed prototypes into iconic innovations. In a world that is quick to dismiss new ideas, the HODL mentality provides a counterbalance, reminding us that the journey to progress is often marked by failures and imperfections. It encourages us to invest not only our resources but also our faith in the transformative power of technology. By embracing this perspective, we open ourselves up to a future where groundbreaking innovations are not just possible, but probable. The crypto community embodies this unwavering optimism, recognizing that imperfect technology can evolve into something impactful. Just as we have witnessed the evolution of imperfect blockchains into transformative innovations, it's time for the rest of America to embrace this culture of persistence, resilience, and long-term vision.
For sure. Just like Bitcoin, just more assets. And, if people are actually using the Ethereum network post the merge, it becomes the supply of ETH actually declines. So there's less ETH available the more people use the thing. So if we believe in DeFi and the network activity grows in DeFi because more people know about it, they want to experiment, then not only the total supply of ETH declines, and then you have the ETF, taking ETH out of circulation as well. So you get sort of a double whammy effect on sort of the price on the upside. I guess timing is everything. So we think about last cycle. So Bitcoin went down went from 69,000 down to 16,000, right? Solana went from 250, I think, to 7. So yes, from 7 to 250 is going to be a bigger return from 16,000 to 69,000, right? It's the path dependency of returns and the time in which you get in and out of an asset. So you could make much more money in Solana or some other much lower market cap shitcoin than you could make in Bitcoin. But if your ass doesn't get off the train at the right time, you're going to get absolutely wrecked. Versus Bitcoin, yeah, you might get wrecked, but it won't be as bad as going from 250 to 7. So again, it's one of those things, right? Yes, you can make more money in lower market cap shitcoins, but if you don't time it right, you're going to lose more of the downside. So you have to sort of balance those two together. Yeah, so I believe that I have at least for the assets that I have large in my portfolio, I have a fundamental understanding of like what they are, what they're not, and I can trade on the narrative and know when the narrative gets out of whack with what they fundamentally are, then maybe it's time for me to step off. Versus I don't understand what these things are. I've never read the white papers for Bitcoin or Ethereum or, reading research from very much smarter individuals on the like technical things that are going on. I just know what I read on Twitter. Your ass is going to get wrecked because you don't even know whether you're believing in something that's true or false. At least if I know I'm trading a piece of shit, I know it's a piece of shit and I'll size my position accordingly.
Recent analysis reveals that BlackRock's ETF, specifically IBIT and ETHA, have outperformed Grayscale's products. This turnover positions BlackRock as the premier holder of Bitcoin ETF, leaving competitors in its wake. The landmark achievement also cements BlackRock's status as the firm with the largest ETF holdings overall, a testimony to its strategic market maneuvers. Bitcoin ETF experienced significant inflows, particularly notable on Thursday, with $11.1 million recorded. Despite a brief setback with $81.4 million outflows reported earlier, institutional investment saw a marked increase in the second quarter of the year. Expert analysis from K33 Research indicates that both BlackRock's IBIT and Fidelity's FBTC garnered substantial investment activity, displaying heightened institutional interest. In addition to its success with Bitcoin ETF, BlackRock's IBIT has also emerged as a leader in the Ethereum ETF market. The firm attracted nearly $1 billion in inflows, asserting its dominance in another critical segment of the cryptocurrency market. Such performance highlights BlackRock's influential presence and effective strategy in capitalizing on primary cryptocurrencies. BlackRock's ascension in the Bitcoin ETF space, combined with its robust performance in Ethereum ETF, underscores the firm's leading role in the cryptocurrency market. As ETF gained traction among institutional investors, BlackRock is well positioned to leverage this momentum. Moving forward, the firm's strategic decisions will likely continue to shape market dynamics and influence investment flows in the burgeoning sector of cryptocurrency ETF. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.